Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's talk about channels and pitchforks today. When to use them, how to use them, what do they mean? Most of this on the channel side is probably self-explanatory, and really you can do this using any line tool. Depending on your charting software, you will see things like a parallel channel, one such example in 2021, early 2022. Obviously, we have the benefit of hindsight here, but as this is forming, I'll show some current examples. As this is forming, if you're a range trader or you're just trading a range in general, this gives you some sense of price being overbought, price being oversold, price holding a trend at all. You know, if this is flat, obviously price is flat, range bound as it's called. The trend is your friend until the end, and if we are range bound and then we escape that range, as the Wyckofians would call it, a change of character, Wyckovians. It also gives you a sense of the midpoint, where maybe a move is 50-50, whereas, extremes in a range would be similar to overbought, oversold. You also have to buy into the idea that price has memory, whether that's people, bots, volume, however you want to think about that. The whole concept of technical analysis doesn't work unless you believe that price has volume. Whether or not that's true, I don't care, but it's important to believe that that's the case, because then you can establish things like support and resistance. So that's a pretty basic example. And again, we have the benefit of hindsight, but when we're looking at an established range, in this case, a downward sloping range, a bearish range, drawing something like this can help guide you. Are we oversold? Are we actually potentially bullish again, right? Regardless of price, regardless of narrative, what does the range tell you? And you can draw this in 50 different ways. You can use extended diagonals. I'm using the parallel line tool. I'll show you that in a second, but this is just a quicker way to help visualize what the heck's going on, if anything at all. That clearly was bearish. Here's a current bullish example. We are in the midst of this. So in 6 months, 2 years, whenever else someone looks at this, besides this snapshot in time, we can go back and say, okay, if we were to treat every single bottom touch of this as support and every single top touch of resistance, how does that look going forward? Where does that invalidate? And when did this stop working? So when you draw something like this, I like to see extremely high time frame examples. That's why I like the pitchfork, because, and I'll get to that in a second, but because it tells you way in advance where it thinks price would be based on the current rate of change. Channels, very similar, depending on, again, the types of tools you're using. If you're using some extended diagonal, it'll also give you a heads up on future expectations. So we're using this to find support resistances. We're using this to find a midpoint. And ideally, it's helping us form an opinion about the trend. And the stronger price action adheres to these channels and pitchforks, the more likely it is to continue to adhere. Because again, price is memory, and everyone's looking at this, I guarantee you, including me, right? Now, I may have been bearish and still pretty much am, based on the broader shape of what's going on here. But in this snapshot in time, tether has resolved itself price-wise, and that seems to be helping the market. But in any event, if you're just trading this channel, you're a buyer at the bottom and a seller at the top. Another thing to note with any midpoint of any channel, if price tends to respect it over and over and over again, as this seemingly has, to me, that's an even better fit. A lot of this is super subjective, very curve fitting type behavior. Okay. So when I'm making a channel and I see price respect some sort of imaginary line, to me, that validates that channel even further. Here's dot. Here's another active one, right? Now you'll see me draw just a diagonal on here and call this some sort of inverted head and shoulders or downward sloping trend. But again, the same principles apply. For some people, it may be easier to just see this and say, okay, I'm going to sit this out. This is bearish. I'm going to wait till it's either above this channel, or I'm going to buy the blood when it's at the bottom of this channel. Because right now, this is the active rate of change that the market is trading in, the range it's held within. So if you're an optimistic breakout trader, you're buying up here above some sort of resistance diag. And if you like buying knives, you're buying at those lows. Potentially even, you're making a decision on that midpoint, whether you're taking partial profit from buying the lows whether you're taking, partial profit on a short from selling the highs to the midpoint, right? Much like an oscillator, can be very helpful to just visualize where we think price may go based on the current rate of change. And price may go in and out of these channels historically. The pitchfork I'm going to show you might just blow your mind in a few charts here. Over the years, channels may appear and reappear. Price may re-enter channels. That happens. Something like Solana is trying to break out of the bearish channel, and certainly to me looks more bullish than bearish. Does that mean it's a great trade here? Does that mean it's a great entry? I don't know. All I know is it's out of this downward sloping trend and in the moment, and looks like it wants to go higher, right? Now here's a great example that just broke down that I talked about last week and Sunday. This is Apple. Maybe you have an entire country DCAing into this thing every Friday or whatever, every 2 weeks. And for whatever reason, you've got some massive mega trend, and then, they miss on numbers, and boom, it's done, right? The trend is your friend until the end. So this gapped out of this channel, and maybe you want to draw this even tighter to give you some sort of early warning sign. But again, these are subjective, so be careful, because you might say, oh, we're at the bottom of this channel. This is a great buy, right? And then you just get bulldozed after this thing gaps down on you. Or maybe that is the correct line of thinking and you're stopped out, right? Unfortunately, this is a pretty mega drop for getting stopped out, but that's part of the game, right? So depending on how you draw these, be very, very careful. Here's a few more examples. Aave, again, it was in this downsloping trend and it didn't magically get better. You could extend this trend previously. It's still within that channel. It may change on the shape. This may go, parabolic to the downside. This may recover in a flat way. There's also a channel tool that lets you basically draw triangles quicker. I don't use enough, admittedly. It's super easy to do. I'll show that in a second. But if you wanted to, you could extend this line all the way, right? It doesn't necessarily fit the best, but it's not there, ideally. I see people drawing diagonal lines like 20 years back. That's fine, but what I want to see is multiple touches of both sides to be slightly convinced that, yes, there's some sort of price memory there. So you either keep it there or you just readjust after it breaks, right? We clearly broke out of this channel and something changed here. So this technically fits a descending triangle, which may lead to bearish continuation. That would be a breakdown of this horizontal. I like to be optimistic and say, look, this thing's already down 85% from the highs. This could be some sort of triple bottom, and then watch it on any diagonal breakout. Now, it sort of already gave you a fake out in July, but hey, again, that's part of the game. Nothing's perfect. But when you're going through tens of charts, saving some sort of notes and annotations around what's going on helps you weeks from now when you're looking back on this thinking, okay, what was I thinking in July? Oh, right. I was thinking this is clearly consolidating still. Now, how does this look in October, right? Is it above or below this line? And this also gives you some sort of endpoint where you'd expect price to eventually make a move. By 2024, I think it's a pretty rational line of thinking that, hey, this thing's probably going to make some sort of move because this channel or triangle comes to an end, right? Link, same thing. You can have these open-ended, they all have names. Megaphone, triangle, call them whatever you want. It doesn't really matter. I think just to describe them, it's easy for people to assign a name to them. But Link is the same thing. People have been asking me about Link. There's very clearly a horizontal line or zone here. You've had 7, 10 touches, whatever this is, doesn't matter. Market clearly has a memory of this level, whether it's some whale selling, whether there's some volume spike here, whether someone's getting out at break even from the top. It doesn't matter, right? I don't care. I just know that there's clearly a level here. Okay, price has memory. There's also clearly been a series of diagonal lower lows that fit pretty well. So you're either a buyer at the diag, just saying, look, that's been the trend. The trend has been the channel. The channel tells you there's support down here. Or you're a seller at horizontal resistance, or you're a buyer at a horizontal breakout, right? And you could also draw some sort of sloping diagonal, perhaps, to set a midpoint here. But this would be an active example of how I'm using something to help me. Now, maybe I just need a horizontal line, right? But if you can slice it and dice it slightly better than a horizontal line, I think it does give you some heads up as to what the behavior in the market is currently. And here's obviously the ETH example. Again, this, you could think of it as a channel, it doesn't really matter, or just draw some lines on the chart, right? But again, at the end of the day, there's some expectation that by November, we should have a decision here. So certainly before the end of the year, we should have a decision here. Either none of this matters and hasn't mattered, and we just go flat line sideways, or when we break this diagonal resistant support, we go lower, or if we break 2K, finally, that's it. That's the breakout. That's how we eventually lead to higher highs. Thus far, we have survived on this diag, and depending on how you want to draw this, depending on how many degrees of freedom you want to give this, you can also say, well, there's some support potentially lower. Typically, if we have got recent supports that are valid, I wouldn't always assume that, hey, there's a support lower than this, right? For me, this is exactly how I'd expect it to react. So before I talk about Pitchforks, let me mention today's video sponsor, KrakenPro. KrakenPro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. KrakenPro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out KrakenPro with the link in the description of this video. And on Kraken, in their charting tool, they've separated out the channels and the pitchforks. Depending on which version of TradingView you're using, you're going to see different variations of this buried somewhere. But at the bottom here, you'll see a parallel channel, which you just draw the lines and it'll draw that for you. Or we can use the flat top and bottom tool to give us that super quick and clean diagonal and horizontal, right? Now, do you need to use these specifically to draw this stuff? No, obviously, you can use the line tool. You don't really, or the marker tool. You don't really need to know that's there, but I do think it'll help, especially the newer people, clean up what they're looking at. And then the pitchfork tool is the next button down. Now, as we transition and talk about pitchforks here, there are a lot of different pitchforks, a lot of crazy stuff. I'm going to focus on specifically just the vanilla pitchfork. I think it's probably referred to as the Andrews pitchfork. But how you would draw these, we have that selected. You pick 3 points, you get a rate of change. Does that fit price? Not really. Certainly tells us we're out of any downtrend. And you'll notice the 3 points I'm picking don't always have to be extreme highs or lows, don't always have to be local highs or local lows. But ideally, they are local highs and local lows, right? So this gives you, to me, a channel with rules, okay? Again, we're getting some rate of change. When price is fighting to get out of a bearish channel, that tells you, okay, it's probably invalidating this channel. Certainly that was the case later in the year. If we had actually been maximally bearish, we would have recovered in a bearish fashion back into this very extreme downtrend, right? You can use the rate of change as a way to understand how extreme is this trend, right? A 45-degree angle for any trend is pretty extreme. I'm also using log most of the time with pitchforks. So in case you're wondering, why doesn't my pitchfork fit the way his fit? Make sure you have log turned on. Another way to make sure you are using the exact highs and lows, you can use this magnet tool. And there's a weak and a strong version, that doesn't really matter, but it'll suck your cursor to the wicks. That way you don't have to worry about trying to find exactly where those levels are. Let's go over some examples first. Investopedia. I was just checking, do they have anything on pitchforks? Apparently pitchforks are not well known and rarely used by novice traders. Now, I don't think that's true, but maybe it's just because I like them and use them. Again, this is just a more serious channel, a channel with rules and consequences, let's say. Very similar. You're just drawing diagonal support resistance. It's nothing crazy. But just as they show in their example, you ideally want 3 extremes. An extreme high or low, a local high, a local low, right? Ideally. And they go on to say you can use these areas for stop losses, which again, depending on how you trade, certainly, if we want to use this midline in this example as our stop loss or a stop limit, right? you can do that. And then at the very end, it's interesting. They say, ultimately, there are no hard and fast rules about how you place your points and draw your channels. It's a matter of judgment. And I can agree with that completely. You really have to get comfortable with knowing timeframes, levels. Eventually it'll come. It'll just take some getting used to like thinking like, yes, the market sees that this diagonal level's there. I drew it, right? You have to get to know the specific market and time frame you're trading. Now, if you're on the 5-minute and you're making pitchforks, that's fine, but just know that those pitchforks will probably break and invalidate pretty frequently. Now, if we're on the weekly chart and we've got 3 years of data to support a trend channel, then yeah, that's probably pretty solid from a market memory perspective. Now, I did a video on pitchforks for Brave New Coin a few years ago now, January 5th, 2021. And I'm going to look at some of those pitchforks to just show you that I'm not crazy, because they're still valid, they're still active. This is the original kind of OG pitchfork on Bitstamp. So how do we draw a pitchfork? We find a series of 3 points. Each of these points, like I said, should represent extreme highs and lows in price. And then the pitchfork will then project the expected rate of change for the trend based on those 3 points. Okay, so in this example, I'm picking these 3 points. The reason why I found pitchforks so appealing is because back in 2016, when I first discovered them on TradingView, it was like, oh wow, this thing fits like a glove, right? This has multiple years of trend here. It's hugging the midline beautifully. It's hugging and rejecting and supporting exactly where it should on these diagonals, right? I think very rarely, this is one example, but very rarely you will see trend explode higher like it did in 2017, right? Typically, these will just continue and then invalidate lower. Now, what's even odder about this specific pitchfork is we actually revisited that high in 2021. I don't know if that's a coincidence or not. We also revisited that high in 2019. The lows didn't work out so well, right? We were extremely all over the place on this. Currently, the high for this, I think, is like 9 million, so it doesn't make any sense. But interesting how that worked out. Probably just coincidence, right? It projected something higher, and we found the levels. But anyway, there are more rules, which honestly probably aren't too helpful, because they kind of just say, yeah, we're probably going to go up or down. But I think the most important rule for the pitchfork is the median line acts as a magnet for price. There's a high probability price will reach the median line. So within any given trend in the channel, you're probably going to attempt to snake, and weave in and around that midline. And the more data points you have to support that pitchfork, the higher the likelihood that that midline is also extremely real. So these are the rules if you'd like to, read them. But let's look at some examples. So this is an active example, right? We'll go over some historical examples, but this is one specifically for ETH. Pick 3 points, we get a rate of change. All are extreme highs and lows. Typically, but not always, the base of the pitchfork will also follow price. Now, you could draw this a slightly different way and use this high, and then you'd have a perfect diag on price. Before this COVID candle, I think that was actually the pitchfork. But anyway, this was the rate of change, and you can see where it took us there and back again from the midline. The highs were certainly respected as overbought territory. Each diag in this pitchfork will have specific values in TradingView. You can always add additional wings to this, where, again, people, I don't know why they yell at me for this, but if this is the pitchfork and this is the rate of change and we're going above it, then I'd assume we'd also find some support on the bottom end, right? You could say, well, maybe this didn't fit so well, we went way above this. Sure, okay. But at the end of the day, this did give you some idea that, yeah, we're pretty overbought up here. We also reconsolidated at the midline. We're reconsolidating at most of these diagonals. Even here, we're at this diagonal now at that extra wing in the pitchfork. So my read of this currently would be, this is the expected rate of change. This should be a successful support test. And if it is a successful support test, we should return to the midline. That would be my read on this, regardless of what price is, right? This is how you get stuff like 33K by July, because you're saying, okay, here's the rate of change, here's the calendar, that's it, right? 10K by July 2024. So in July 2024, let me know what ETH is at. Are we at 10K by then? Perfectly possible if we continue to hold this rate of change. Now, Bitcoin has an interesting channel potential pitchfork. Like I said, the channel probably fits better in this specific instance, but this is highly subjective, so be careful. But which one do you like better? Do you like this? Here's same rules, right? We're picking 3 points, extreme highs or lows, and we're fitting that to price. This may recover. In that case, the midline would be 35, whatever that is. Reasonable, but you get more and more subjective. Is this an invalidated pitchfork or is this a support level, right? I don't know yet. Let's put it like that. Now, if this ends up being a support level, maybe we add a wing to this pitchfork and that gives us an additional resistance wing, and then we can say that our resistance level expands, right? But I think it's a bit too early for that in this specific version. That's why this is probably a version that makes more sense. We're hugging the midline, we're bouncing around at levels that make sense, and it's currently projecting something in the high 30s as a resistance level in the near term, right? And we turn bearish if we're below the midline, which makes sense, somewhere around 27K. So both of these can be valid, but tell you different things. Again, this is subjective. It's dangerous, okay? It's dangerous, especially if you're new. Here's some old ones. This is Link. I got a lot of crap from the Marines when I said, okay, party's over, when it fell out of this pitchfork. When it hugs a trend channel for years and we're below that channel, that is a bad sign. So from there, you essentially got a parabolic down move and now you're reconsolidating. So at the end of the day, this whole multi-year journey was really just 3 trends, right? We were in this channel, we were in this parabolic down move, and now we're in consolidation period. For me, that's comforting to know that, I don't have to make a bunch of decisions all the time. I could just look at what's going on in some multi-channel invisible line trend. Here's Monero since from 2015 to 2019, kind of the same thing. Certainly gave you plenty of warning that, hey, this thing's overbought up here, and we're definitely, invalidated once we're below that. Now you can also treat the midline as, that's where I want my bids if I think this thing is going to keep going. But once we reach a maximum in overbought territory, I wouldn't keep putting bids on some sort of mean reversion bounce necessarily, right? It certainly depends on structure, but yes, hindsight is valuable. Just saying, look, this is how they can play out, right? Clearly told you to get out here, clearly told you bull trend was over here, and what has happened since 2018? Flat, right? It's barely up since 2018, 2019 highs. Here's some bearish examples. If you, now, you don't need parallel lines to tell you that, hey, this thing's been going down only for 5 years, 6 years, but it can be helpful if you're thinking about, hey, what does EOS BTC look like? Well, it's on the bearish half of a bearish pitchfork. So I certainly don't expect a miracle anytime soon. But hey, if I want to bid this, I would be bidding this in the purple and white zone. Certainly wouldn't be touching it until it's anywhere near that. Zeke BTC, same thing. Pick 3 points, you get a rate of change. Since 2018, hey, this has looked pretty good. It's told you where support is. It's told you where resistance is. It's told you we're still bearish this whole time. And yes, we've hugged the midline over and over and over and over. We're currently at the midline right now. So trend is your friend until the end, and we're clearly bearish on that one. Now some controversial pitchforks as the last two. Here's ETH BTC, slightly sloping negative, would suggest bearishness. Is this valid is the question, right? Are we at some sort of ETH BTC high? Because this says we are at the maximum throughout this purple zone, right? This says we're at the maximum if this is real. And you could say, well, we're in the bullish half of a bearish pitchfork again. We're certainly not expecting anything way down here, but midline is reasonable, right? Midline currently around 0.2. Now, I don't know about that in the moment. Here's another version of that, depending on which 3 points you pick. But currently, I wouldn't expect a bullish miracle using this. This is equally as bearish as the other example, and in my opinion, probably fits better. Clearly, we became bullish once we broke that level in 2021. So this tells me I don't want to get bullish on ETH BTC realistically until we're out of this channel. Okay, that's 1. 2, we may return to this midline if we break down. And if things get really bearish, 0.1, 0.1.5, whatever that is, may be a realistic target. Alternatively, you could draw some sort of pitchfork here, right? That would give you some sort of parallel lines looking like this, perhaps. Let's just draw that real quick. And hey, what do you know? What does that tell you? It tells you we are out of the bullish pitchfork, undeniably, if this is real. I think this is a pretty rational take. Price acted very differently once it broke down from the midline. It retested the midline, and it's just sort of drifting into no man's land. I know this is going to invoke a lot of feelings in some people, but it's one way to be honest with yourself and say, look, this pair, whatever it is, may or may not be as bullish or bearish as I think it is based on the current rate of change of price, in this case dating back since 2020. So look, these are subjective. That's part of the point. That's okay. Curve fitting is part of this. Channels are very useful. Have fun with it, play around, and take it seriously. Make some trades off this once you're comfortable with drawing lines on the chart. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.